$60 million lost, not from ransomware, not from a 0-day, not from someone breaking into a server and encrypting the company. Orion S.A. disclosed that an employee was deceived into making multiple wire transfers to accounts that were controlled by criminals. The expected loss was approximately $60 million, and that was only one employee, a legitimate pay process, and fraudulent instructions. I'm Daniel Rodriguez, and this is RepSec Wednesday. Today, we're talking about business email compromise and why one of the most expensive cyber attacks in your organization may never look like a cyber attack at all. Business email compromise, or BEC, is easy to underestimate because the attack often looks extremely ordinary because there's no ransomware, no server outage, no obvious malware alert, and the attacker usually wants the transaction to look exactly like all the other transactions and emails that your employees already process every single day. When we're talking about transactions, I mean an invoice, a payment request, new banking instructions, maybe a message from someone who appears to have authority like a manager or supervisor, and the attack succeeds when a normal business process produces the wrong outcome. So what happened? On August 10, 2024, Orion determined that one of its employees had been targeted by a criminal scheme. And according to the company's SEC filing, that employee was induced to execute multiple outbound wire transfers. And those transfers all went to accounts controlled by unknown third parties, which were the attackers. Orion estimated that if no additional money was recovered, the company would record a one-time pre-tax charge of approximately $60 million. And the employee involved was not a named executive officer. And that detail really matters here. It's because BEC, or business email compromise, does not always require compromising the CEO of a company. It just requires reaching the person who can make the transaction happen. And that is a part that executives should really pay attention to, because the attacker does not necessarily need administrative access to your network. They just need operational authority. They just need the person who can approve the invoice or the banking details or release a wire and make that person believe that the request is legitimate. And BEC turns business authority into the attack surface itself. So typical business email compromise attack starts long before the payment request. First, the attacker typically learns how the organization works. So who's paying the vendors, who's approving the invoices, who reports to who, which executives travel, and which suppliers regularly receive large payments. So what language does the organization use internal? And then comes impersonation. Sometimes the attacker compromises a real mailbox. Sometimes they spoof a domain. Sometimes they create lookalike addresses. Sometimes they impersonate a vendor or executive using open source information or information that they gathered from online, also called OSINT, short for open source intelligence. And then they wait for a transaction that makes sense. And that is really important. The best BEC attacks do not invent a completely new business process. They usually insert themselves into an existing one. Then something changes. Maybe the bank account, a payment destination, an urgent deadline, a confidential acquisition, a request that supposedly cannot wait. And the victim completes the transaction because everything around the request appears normal, just like every single day. And here are 4 reasons why this attack is so effective. Number 1 is that the transaction may look completely legitimate, right? So the employee may be using a real banking portal. Their credentials may be valid. Their device may be trusted. The wire transfer itself may not trigger a security alert. And from the system's perspective, an authorized person authorized the payment. Number 2 is that the attacker can target the process instead of the executive. Number 3 is that familiarity lowers the suspicion, because a request involving a known vendor, known executive, or expected invoice feels safer than a random phishing email. And attackers use that familiarity against your employees. And last but not least, the money can move faster than the investigation itself. Because once a wire reaches another financial institution, the recovery problem becomes way more difficult. And the FBI continues to classify BEC among the most financially damaging cyber-enabled fraud categories. And according to 2025 Internet Crime Complaint Center report, they logged 24,768 BEC, or business email compromise complaints, and roughly $3.05 billion in reported losses. So how do we stop the transfer before it moves? Any change to the banking instruction should trigger independent verification. This does not mean replying to the email asking if the change is legitimate or reaching out to the phone number that the attacker used in that message. Contact the vendor or executive through contact information already stored in your systems. So that verification channel needs to be independent of the channel that delivered the request. Number 2 is require second approval. And that's because a single employee should not be able to change the banking info and release a large payment without another person independently validating that transaction. Because a lot of the time, speed should not be more important than the verification itself. Because once that money leaves your account, it's very, very hard to get it back in. Number 3 is treat banking changes as security events. So most companies treat vendor banking changes as finance administration, but they should be treated as security sensitive events. And that includes a new beneficiary, a changed routing number, a first time account, an unusual payment amount, a payment outside the normal schedule, an urgent request. These are all signals that should combine into a risk decision before the money leaves the account. The Orion case is useful because it strips business email compromise down to what actually matters. A criminal convinced someone inside a legitimate company to perform legitimate actions that produced an illegitimate result. The system worked, the payment worked, the employee had authority, but the process itself failed to distinguish a real request from fraudulent. Orion has since recovered part of the loss. In its third quarter 2025 results, the company reported that $7.3 million were recovered. But that's why BEC remains expensive. And it's because the attacker doesn't have to break everything or stay in the system for months. They only have to make one good transaction look normal. If you found this useful, please subscribe to Visionary IT for more content such as this, and like the video, and send this to the person responsible for approving your company's wire transfers. Stay safe.